Hello, Warriors. How's everyone doing today? Ingmar, hi, Blake, AJ, Hugo, Glenn, Richard, James, hi, Bran, hi, Ryan, and Ryan Varghese. How are you guys? So, SMB, there's the Swiss. Who wants to take it? Ryan?
Morning, mate. How you doing?
Okay, buddy. How are you? So,
Yeah, all
they
good.
eased.
Yep, they eased 25 as largely expected. It looks like they were on hand to catch any disappointment because it dipped for about a nanosecond before it got brought up again. And here we are, back still in the range. They're looking to potentially cut more if the inflation keeps going. So they're ready to cut more, ready to intervene in FX as usual. And they did significantly cut their 2025-2026 inflation forecasts, but said they're not heading towards deflation again. And that was it. S&B Jordan's last meeting. Thank you very much. It's been monumental. On to the next
Where,
one.
where's he going now? What
Probably
central bank?
Goldman
Huh?
Sachs or someone. Goldman Sachs or someone.
Oh, probably, yeah. What do you make out of the action yesterday? You gave four options in euro, and the option of it taking out 112 and then failing happened, and then we're up today. What are you thinking?
Yeah, it was looking like it needed to, I like to use the phrase "shit or get off the pot," and I got lucky. I had my buy stop at 112.15, and the high was 112.14. So I got lucky
Oh,
that didn't get triggered. But
mhm.
I did try a little one at 11.80 around the intraday support. I thought I'd give it a go in case it bounces back, but no. Then yeah, it went all the way back down again. So we've cleaned out that episode of trying the 112. So it's got to build up again to have another go. So 112 is still the main level, and I expect we'll see a bit of resistance into there again if we get up there. Now the question is, what does it do from here? Do we get a steeper pullback, or does it keep going? And as you can see from your dollar chart there, it's the
Yeah,
dollar's not ready to roll over either.
yeah. I thought we'd take out par first before we did this, and it still could, maybe into next week, but I'm smelling a dollar rally coming.
You're smelling one, are you?
Whether,
The old
yeah, the
bloodhound nose
sniver.
is going.
Yeah, and Euro's the worst of the group. It was all the way up. I'm not saying that we can't push up for a three, but um, I I just see at least back to here. And I've seen counts that if we get over like 102 and a half, 103, that we could actually see 106 again. That would have to be with some type of geo or risk off event.
Yeah.
Which could happen in October. We're almost in October, so um, silver made new highs for the move. I'm sure Stelios is here to talk about it. We took out the highs from last May. Uh, still not confirming. Is this a daily? Yeah. And what's weird is it's not confirming on the 4 hour either. With this huge move, gold is, I think. It's not quite, but that's not a great reading, but actually silver still is diverging. So I don't know. You may want to have FOMO. I wouldn't be surprised if Stel has taken some partial profits here. Are you
I
here today,
have.
Stel?
Hello, I have, yes.
Okay,
Um,
I figured.
the question is, whenever you get to big important levels like the silver, those previous highs of 32.50, you won't get, for me personally, I don't assume that it's broken just because it's gone over intraday. I want to see a daily close and preferably a weekly close for me to be certain. And we have to remember we have some pretty important data today and tomorrow, so that could spoil the party for metal. See, I'm not always uber bullish. There could be, like you said, Dale, a dollar spike maybe on the back of data, maybe on the back of risk off or whatever, and that's going to definitely push metals lower. And now that silver has gone at least temporarily above those previous highs, that would be a false breakout, and that's never a good thing in the short term. In the medium term, you know my view. I always talk about look at what central banks are doing and not what they're saying, and they are easing everywhere. China is easing. The Fed did 50. So for me, the medium term move is always going to be higher. The question is, what entry point can you get that maximizes your return? And that's obviously the difficult part. But I am with you, Dale, on this. I do think that there is a chance of a reversal in the dollar, and that's going to take metals lower. And we also have to remember that the yields are also at the kind of let me take the charts for just 1 minute, okay? Let
Sure.
me take the charts. Hold on. Continue. Desktop one. Here we go. What is this? Hold on. What is that? Yes. So 10-year US, the previous low was 378 back in late 23. We broke down, false breakdown, came back above, broke down pretty convincingly, and now we're retesting it. So this, I think this will eventually resolve to the downside. I think we're heading to 330, but in the short term, if we see a dollar spike, based on what we talked about a second ago, this could easily rise above, and this is going to have stops above in terms of yield rising. So I think we could, rally towards 4% again. And
Yeah, I
if that
think so.
happens, if that happens, which is really, quite possible. Nothing goes in a straight line, right? So we could easily see then gold and silver go lower, and that's going to be a false breakout for silver, et cetera, et cetera. But for now, this was the view. It broke out. We're trying to take out the highs, but I'm not convinced just yet. If you, I've shown this before. If you go out on a weekly, I mean, the next level is probably around 36 to 37, and it's just clean air up above. So I'm not worried in the medium term, but in the short term, that's why I always and I write this on the chat room. I always scale in and out all the time. I don't want to leave money on the table if I can take some and then reload and then reload and then reload. So that's my view on that. Oil is interesting because there were these headlines from Saudis abandoning their $100 targets and all of that. Now, Ryan made some good points in the chat room. Is not convinced too much about it, but the main thing is that look how close we are to these lows here in this kind of support zone. And if I zoom out, you will see how scary this is if it breaks lower. So, next level is 50-ish. And really, who knows? But especially if we get risk off, I mean, this is going to just collapse. So oil is definitely worth watching. And let's not forget, lower oil prices are deflationary, or at least they're not inflationary, right? Everything needs oil to be produced. So that's going to, in turn, help bring yields lower, prices lower, central banks cutting more, et cetera, et cetera. So oil is something I am definitely watching. And what can you say about stocks? I see absolutely nothing bearish in any way about any equity in the index, really. So again, I've been saying this every time I've come on the webinar over the past months. If you ask me to buy or sell this, I will buy it. It's as simple as that. It's still very clean and very bullish. So yeah,
Okay.
that's what I wanted to say. Anything else you want me to look at, Dale?
Well, uh,
Bitcoin?
what do you think of, yeah, Bitcoin's going to try that upper end. Looks like it
Yes.
may try. Yeah.
Yeah. I mean, Bitcoin is a risk proxy. So given the fact that I am still bullish indices, metals, everything, I am by definition bullish this as well. But it does have to break above, 67.5 or whatever that is. Ethereum is trading worse technically, but really, if this breaks higher, then again, you get to the point where you have to assume that it's going to be gunning for these highs, which are the all-time highs, right? So 70, yeah, 70, almost 74K.
Okay,
Patience
nice.
required. We're still not there. Patience required.
Yeah, patience always required.
Yes, sir.
So thank you so much, Stel,
No
and
problem, man.
nice trading.
Thanks, man.
And Ryan, anything you want to cover before we bring Blake in? That's of note to you.
Let me have a look at my notes. I'm not sure
Well,
what was
you
out.
guys,
We had,
you guys haven't talked about China.
yeah,
China,
well, that's what I was going to say. Yeah, China had another good day over there in their stock markets. If you look at the composite, up another 3 and a bit percent. That's really what's dragging up global stock markets today. So that's still pulling things. Oil's a little bit on the weaker side. We're still in this situation where on one hand you've got the poor fundamentals, the poor demand side. On the other hand, you've got the Middle East risk and you've got this risk on business from the rate cut. So, it sort of switches day to day. 1 minute you're trading risk on, next day you're trading the fundamentals and so on and so forth. But China keeping things up is keeping risk up at the moment. How long that lasts, though, is another kettle of fish. Oh, and
Yeah,
you guys managed to kick the can on the stopgap bill to December the 20th. Well done, boys.
right. Yeah.
Good effort.
I forgot who told me this. I'm hearing myself as an echo, but it may have been Adam who said, or someone else anyway, that China, with what they're doing, that actually people aren't going into China. That's actually people see what they're doing and the overall impact for global equities. And instead of buying China with their opaque things and disappointment, they're buying the U.S. because it's more bullish the U.S. than it is China.
Yeah,
Maybe not more, but it's bullish both. And why take the risk in China when you could,
exactly
be in our markets?
exactly because it's being seen in the same light. The big 50 cut from the Fed is being seen in terms of not just protecting the growth they've got, but that it actually boosts growth. And the same as being seen in China with their big easy measures. I've been touting this, that the measures haven't been working for weeks and weeks, and we need to be careful that they bring out the big guns, and they've started to bring out the big guns, which is also seen as a boon to their economy and thus global growth. So, but you're 100% right. Where are you going to park your money? There's no foreign money going into China right now because of all the bum fights between the US and China. We saw a big outflow of China over the last couple of years. No one's going to be rushing back. So they're both going the same way. The US and China looking to go the same way as far as trying to get their economy going. But like you say, where are you going to put your money? You're going to put your money in the US and others. So you're quite correct. But until China changes its tone towards the West and encourages money back into China, then everything they do is just going to affect their domestic economy. It's not going to affect their export economy, which we know is huge.
Okay, well, Stelios put the top in silver. Nice little wick there. Be careful.
Yeah.
You did it, man. You sold the top. Maybe we get a pullback to 29.5 over the next several weeks if the dollar does what we think it may do.
Good do.
Yeah, so nice out too. That's why you sell partials, okay? Take it from a pro. That's what he always does, and that's why he's still in the game. All right, it's a very key thing. If you're all in, all out, you're making assumptions that you're, always going to be right. But if you take partials, you could end up being right short term, bank some money, and then be wrong for direction of the trade. But you had to move in your direction to be able to get paid. We have to get paid in this business too, right? So that's what partials are about.
When I first came here, Dale, you made a great point, gave a lesson that I've always remembered. When you're thinking about exiting a trade, let's say you're long and you're thinking about exiting a trade, the question to ask is, if you weren't in a trade, would you short where you're exiting?
Right. Would you reverse?
Yeah.
Yeah. So, would you reverse? So, all right. Stella's short some silver right now because he sold. I'm kidding. But anyway, it is a good question. It'll keep you in the trade if you just ask yourself that, because most of the time when you're taking profits, it's not a reversal. You're not looking for it to reverse. You just want to
Oh, it's a greed
put
thing.
something in the bank, huh?
Yeah. Yeah. It's a greed thing.
And a fear thing,
Yeah.
the fear of losing what you've got.
Yep.
Yeah.
Yep.
Anyway,
So good morning, guys. How are you doing?
Good morning. Good. How are you, Blake?
Good, good. Obviously we got a bunch of data coming out. I'm feeling a little bit better today. I just wanted to make sure I pointed out that if you guys haven't seen that, the Chinese markets, I mean, this is just, absolutely explosive. You can see what's happened. This is I guess it was Tuesday's PBOC efforts. Then this is yesterday's, and just a massive, massive rally in the Chinese markets. One of the things, obviously, that's helped equities move higher, gold move higher. Now, you were just talking about gold, and Stelio said, "Hey, I'm not always bullish." Which, whoa, look at that. He might actually be saying that right at the high. We've been talking about the 261% extension at 2690 to be the target. I mean, if you just every single day, when we do gold analysis, it's target of 2690, target of 2690, 2690, 2690, 2690, and we're basically came within $5 of that. So here's the thing, and I'm thinking, and remember, we do have some pretty key economic data today. We do have final GDP. We have durable goods. We have weekly unemployment claims. And everybody thinks that U.S. data is going to continue. It's going to start to really weaken here. I mean, that's the bet against the U.S. probably will continue. Everybody's like, oh, United States is going to eventually start to slow. Will it be today? I don't know. But these precious metals are, really at some pretty key levels of resistance. And I think you just pointed out silver as well. You're just talking about silver putting a nice little wick above this big resistance zone, right?
Yeah.
And then also you got equities that are nonstop bullish. I mean, we had a bull flag or a bullish wedge that we broke higher. Nothing suggesting that we're moving lower yet. But at this point in time, things are pretty extended, and we have end of month, end of quarter flows. The dollar moves, and I have to say this, and I want to just mention it, and Ryan, you might have some commentary regarding this. The dollar moves intraday have been so like one-way traffic. I mean, you see the last couple of days, dollar sell-off, you think we're going to break down. Yesterday, dollar reversal, you think we're going to get a dollar, complete reversal. Then today, the dollar's starting to move back down again. We are trying to navigate through end of month, end of quarter flows. Today should be corporate month end, which usually or has been historically dollar buying days, but that doesn't necessarily mean that that's going to be today, is it?
No, but month end for me is very flaky. The models all come out and give their finger in the wind forecasts, and then it usually goes the other way. But things are different. It's more dynamic now. We could have seen stuff done yesterday. There might be stuff being done all week. You never know what's coming. So all you can do is react to it. And what I use end of month for is whether the price is being kicked out of kilter with whatever the current trend is. So at the moment, dollar's been going, largely sideways, unless we get something. If you get dollar today up at 102 in your Dixie, I'd start to think, hang on a minute, that's pushing it out of the trend. So I might think about a counter trade. And conversely, on the other side, if we see it going through, 100 or something, that'll be euro dollar going through 112. You got to think maybe whether that's a fade or a proper break. So yeah, take the end of month into consideration when judging these moves.
Yeah, I mean, it is you can clearly see the last 2 days have been it's all flow traffic. I mean, like I said, it's one way. It's very directional. So I guess what I'm trying to say is you got to be very respectful of it. I want to, let's go back, and I want to talk about the dollar here, and I want to talk about gold here. Gold might be I think near some pretty key resistance here. It's something we've been targeting forever. Obviously, very overbought, but overbought doesn't mean it can't be more overbought. Copper too is up against the Gartley pattern resistance right now. So this actually just completed, which I find pretty key level resistance here. Then I go look at the Aussie, and the Aussie, yeah, we're having a hell of a recovery thanks to China. We pivoted off of this trend line support here, this black line. We were talking about it yesterday on our private shows. The question is, are we going to be able to take out this longer term, multi-year, trend line, which we're, slightly above it right now. I think we need to be watching it really carefully around these levels just because of where the stock market is. And I want to ask you this, and then it looks like Greg is here, so I want to check in and see if Greg has something to say. Ryan, if we had, let's just say theoretically, because we haven't seen it in forever, if we have theoretical risk off, I mean, when's the last time we had any type of risk off? But let's say we did, what do you think is going to be the biggest beneficiary of a risk off move? What do you think?
Based on the fact that it's been the dollar largely weakening on risk off, on risk on, you think it'd be the dollar on the back of risk off, so we'd see the dollar gaining.
Okay, so you'd think the dollar. What do you think, Stelios?
That's a good question. Currencies, I would agree the dollar. Overall, probably the dollar.
Yeah, all right, interesting. Well, we have Grego Horvat's here visiting us, so maybe we can ask Grego what he thinks, especially with maybe gold and Elliott waves and what he's got on his on his radar. What do you think, Grega? Should we see some risk off? Theoretical, which, when's the last time we saw any type of risk aversion? It's been quite some time. What do you think?
I mean, in August, we saw what, 10% of a pullback or so?
Yeah.
But we are obviously, if you remember that we talked in our interview, I think that we are in a very big fifth wave. If we will go to a daily chart, this one, yes. So you are here in a fifth wave of an extended wave three, that parallel channel resistance right around 6,000 that we highlighted several times. I think that up there, it's a pretty big level, obviously still plenty of room to reach it and time as well. But later this year, I just think that we have to be careful, or at least in 2025. I just don't see this market making some very strong blow-off moves just yet.
Okay, well, gold is actually finding some sellers around here. What do you think? Where are you thinking gold's going to go?
Higher.
Okay, but near term.
I mean, higher, but in the short term, I would watch for dips. The support is around $2,600, but still targeting 2,700, if not even higher. We have a pretty strong moves recently, and I just think that there are going to be more opportunities. Silver, very, very similar, obviously. On silver, let me check my charts here. Just in a second.
Blake, I heard a narrative. Remember when Trump was elected in 2016, we were limit down and then we turned it. If he's elected, so we put in a significant low, maybe we go full circle and the market blows off on a Trump win, and then that's the top. Just
yeah,
the
I heard you
opposite
talking
of what
about that with your guest yesterday. Is that who you were discussing that with?
No. It's some guy that I know on Twitter put that out to me.
But yeah, but you were you were doing an interview yesterday or the day before yesterday, and I caught you saying that as well, which makes sense. I mean, Trump's election, that everything turned around when we realized it wasn't going to be Hillary, and then that marked the bottom, and maybe the top is when full circle when he is elected. And I mean, it could be. I mean. Yeah, maybe.
Just something to think about if, after the event and we're trading at record highs.
Yeah, I mean, I wouldn't stand in front of a Donald Trump win with that in mind. That would be, you would think that you get some sort of follow through, but But yeah, maybe in the days ahead after the dust settles a little bit, yeah, that's possible.
Yes.
Anyway, Grega, you had said you wanted to talk about silver a little bit. What
Yeah,
are you thinking
yeah.
here?
I'm thinking that silver has room for $34 dollars or so, but keep in mind that there is a very strong resistance up there of a free wave recovery from COVID lows. So up there in that area, I would be very, very careful because clearly this, if that's really going to be a free wave rise from that COVID lows, then certainly we are moving into some serious resistance up there. But as said, also this could come in line with the stock market as well. So maybe in 2025, we are going to see these cycles to turn around.
All right,
How
very
about the
good.
dollar?
Well,
How about the dollar, Grega?
Dollar is still looking for a break below 2023 lows. So around 97, I think that that's downward projection and should be very, very interesting zone down there. And that's when I think that cycles will change. I don't see dollar like saying going to 90 or something. I think that 97 is a pretty strong potential limited downside.
And
you
you know,
know,
I was talking about 106 after a bottom, and that's what you have. Was that it? The previous chart? Well, you have that line up there near
right here.
106. What's that mean?
What that's a triangle projection from
Okay.
measured wave A lag from end of a triangle, and you get the projection around 98. And then the second blue line, it's from a breakout point from a triangle where you
Basically,
have
he's looking at
96.
this, something
Exactly.
like that.
Okay, so
Exactly.
we could get back to that major resistance, one we put in lows here.
That's correct.
Okay. You're the
All right,
second guy
so
I saw with that count. Okay.
look, we got data coming out in 3 minutes. So I'm going to get ready for this data that's coming out. We are seeing the euro push to highs already. We're coming back up towards that 112 level, and we have a lot of data coming out today. But let's go around the horn and see what Ryan, what are you looking at today? What's on your radar?
Well, I'm keeping an eye on dollar yen. It's just knocked out my hit my trading stop. We were trading 145 above 145 this morning, and now we're trading down at 144.20. So there's still
Amazing,
plenty
right?
of volatility in this one at the moment. I may still
There
look
is,
at it.
there's a big election this week, or there's a big
Yeah, I was
appointment.
going to say we've got the leadership contest going on in Japan, which could be a bit of a mover depending who comes in, whether it's a moderate, in the same vein as Kishida, Nabe, or whether it's someone who's going to tip a few apple carts over. I've got to. That's reminded me. I've still got to do some stuff for the chat room and get some research into that.
Yeah, and whoever is is it selected or elected? What's
I don't
that?
know. They probably pick stones out of a pot or something. I don't know how they they do it over there.
Well, whoever it is, and it will be. We should know tomorrow.
Tomorrow.
Yeah, that should be the next prime minister of Japan. I believe. So since they are the ruling party, so it could have some impact on some yen. So you're looking at yen. What else are you looking at?
I'm going to keep an eye on this data, the durables data, because that's a bit more relevant than the GDP data, just to see how the consumer side of things are faring, white goods and that sort of thing. And it's another bit of an insight into how the US is doing. So that's the game we're playing. Prices wise, I'm just monitoring my dollar, my euro dollar longs, my dollar knock longs, and just seeing what's going to be occurring.
All right, Stelio, since you're still here, what are you thinking today?
Well, I'm not trading anything now. I'm going to be waiting for the data today and tomorrow, really, to decide. I work on a different time frame to you guys, so I'm not much help for today.
You work on a yacht time frame. That's the
I
time frame
work
you're
on a
working.
Greek time frame. You know it.
Yeah. Yes. Greek time frame is an interesting time frame. All right.
Like 5 seconds.
Oh, okay. Sorry, Dale. Sorry, Grega. Here comes the data. Durable goods better than
Green.
expected.
GDP in line.
You guys see jobless
PC
claims yet?
Mm, jobless claims 218 versus 224.
That's a decent number. I
And
mean, you
revision
can't.
slightly higher. So jobless claims is really non-event, but PC prices, core PC prices, same as expected. So, on the green side for
Yeah, I
durable
mean,
goods. Yeah.
you guys can't. I mean, we can't really complain about that as far as data goes. I mean, that's pretty decent data on the day. I don't know. A lot of people have been betting against the US and, thinking the data is just going to turn. Yeah, I mean, actually, you know what? We have a great interview today. Dale, you brought in Peter Bookvar. Probably not a better person to talk about this because, obviously as an economist, there's a lot of views out there. A lot of people think that the US economy is ready to turn at any moment, but they've been in that camp for, a long time. And U.S. data continues to surprise and support the dollar. And with gold at these levels, it's going to be really interesting to hear what Peter has to say about the markets. With that being said, I do want to remind everybody this is the last couple of days you guys are going to get for the September, or excuse me, the 8-year anniversary sale pricing that we have. Remember, when these prices are gone, they're gone, and you don't get them again. So not for a long time. So make sure you take advantage of that with ForexAnalytix and come celebrate our 8 years with us. Ryan, thank you for your input today. Great flow show. I listened to half of it today. After I woke up, I got to listen to a little bit of it. Greg, I didn't get to see your part in the flow show, but thank you for being with us today and gracing us with your presence. Same with Stelios. It's always nice to have his views here. And Stelios turning into a bit of a precious metals bear is interesting. Probably right at the right day. And Dale, thank you for guiding us. Have a great interview with Peter.
Thanks, Blake, and congratulations, Stel, and thank you very much, Ryan, and welcome back, Peter Bookvar. How are you, buddy? Waiting for you to unmute, and we have plenty to talk about.
Yes, thank you.
All right, so great to have you back here, Peter. You've long embraced precious metals a long time ago, many dollars ago in silver, many hundreds of dollars in gold. Very nice call. I know you went through some stuff when gold wasn't doing anything and Bitcoin was taken out, really, outperforming gold. The opposite is
You mean
happening.
Bitcoin was the new gold?
Yeah, Bitcoin. That's right.
Right. I was
Bitcoin.
told that about 1 million times.
Yeah. Well, it's not acting bad itself, but why don't we talk about in like real back towards the Fed and then China and the whole world is easing. And why are they easing? Our economies, global economies, weakening? And do you think China's going to be successful this time around? I mean, the China's charts look like, kind of a moonshot, a rocket taking off a launching pad.
Well, I'll start with China, and
Okay.
I've been a close watcher of China for a long time, and
You have.
have been, yeah, and
And disappointed at times, like the reopening trade that never happened.
yeah, exactly. And
Okay.
we've been long some China-related stocks. We've been long the Macau stocks. We've been long anything touching travel and leisure on that reopening trade, which actually has been okay. Trip.com has been pretty good to us, and also a few others. But containing our position in light of still the controversies with China and Taiwan and our relationship with them. But we know that their economy has obviously been mostly under pressure because of what's going on in residential real estate, and everyone's been waiting to see how China was going to deal with this. What they've done up to this week was really more focus on bankrupting a bunch of developers to sort of rip the over-levered Band-Aid off, which they were very successful doing, which ironically in the US in 2008, we just bailed everybody out. China is didn't want to do that. But they're realizing their economic consequences at the same time. So I do think that the announcements this week. Let me step back for a second. So I entered the year. One of my contrarian trades was the Hang Seng was going to outperform the S&P 500 in 2024. And boy, was that wrong. For not only was it dead wrong in January because the Hang Seng tanked while the S&P rallied, but it was certainly dead wrong up until last week. And now they're actually getting pretty close to each other because Chinese stocks trading in Hong Kong, and I'll focus on those rather than A shares, got extraordinarily cheap. And for reasons we know, I mean, that they were cheap for a reason, but I think that the daily bashing of China, I mean, I can't think of any, in all the years I've been doing this, I can't think of any asset class, and I'll call Chinese stocks an asset class, or I should say the Hang Seng an asset class. Not actually cheaper, but have been where the sentiment has been this bad. I don't know any other thing that I've seen where the sentiment has been this bad. And when you get to, when people use the word uninvestable, that's when the sentiment. Now, of course, you can be Russia where they freeze all your assets. That's the one thing you have to be careful of course. But I think we just pushed the envelope too far. And to tie this back into the Fed and other central banks, what's interesting is that we have the inflation spike, we have the inflation coming back down, and you have these central banks that are essentially catching this falling inflation knife in the sense that rather than waiting to see if inflation sustainably stays low, they're more hoping and praying that it does, and thinking that just because you have a two-handle again in inflation, that somehow we can declare victory on inflation. It's sustainably keeping inflation low where you win the war on inflation. All we're doing now is winning the battle. So now I grant them making some rate cuts. They were tight for a while relative to inflation. The economy is very squishy. Okay, so I'll give you some rate cuts. But the expectations that we're in the cusp of a major multi-year rate cutting cycle, I think is just way too cute. And to think that inflation is just going to fall back to 2% and then magically stay there is way too cute too. And the China news, I think, is waking people up to the fact that just imagine if China's economy stabilizes and what that will mean for this whole inflation battle. You can see an inflection right back up again on goods prices. And it would throw all these plans of central banks out the window, and particularly U.S. markets complacency that the Fed has our back, the Fed put its back, and everything is just going to be just fine. And we have all this faith that the Fed will glide us to this very smooth landing.
Right. Yeah, there is a ultimate confidence, and I think a lot of this money. Tell me what you think of this. That people that fear owning Chinese equities because of recency bias over the last several years. It helps all the global markets, and they're parking their money. A lot of people are parking their money here because it's just as bullish for the U.S. as it may be for China.
Well, what happens in China is not necessarily bullish for here because we don't sell that much stuff to them. And in fact, with tariffs and all these different barriers that are going up, we rely on them much more than they rely on us. We buy that $550-ish billion worth of stuff from them, and they buy maybe $150 billion worth of stuff from us. And China has $100 billion trade surplus, and basically every month. So the rest of the world is much more reliant on them. So strength there, particularly on the domestic side, doesn't necessarily help us here. Now it's going to help maybe Starbucks and Apple and Estee Lauder that are doing business there. But we have to be. We define our markets and our economy with trouble in China. Just because China recovers doesn't mean that we're necessarily going to benefit. And if anything, if this restokes inflation and interest rates start heading higher again, then we got big trouble. And particularly with central banks that have totally gotten complacent when it comes to this inflation battle. So this is great for Chinese stocks, no doubt about it. It's hopefully it will be good for the Chinese economy, because what's good for their economy is going to be good for Asia. And to tie that back into the US, what's good for Asia will be good for us and the global economy. Half the world's
Right.
population is there. I've
Right.
been bullish on Asia, not just China, for years, essentially betting on the growing middle class in that region. And if China can stabilize, there's a very exciting investment story in Asia.
Okay. And let's go to Asia. Because when the yen was trading up near record highs, I read your free stuff that you send from the book report, and when last time you were here, you thought that the yen was topping. That was here. You were here about 3 months ago, and the way you were participating in it is buying 7-Eleven. So did
Yes.
this massive decline? How do you like the memory, bro?
Well,
Anyway,
7-Eleven, that was pretty good. 7-Eleven actually, soon after we spoke, actually got a takeover bid.
yeah.
Um,
Okay. All
so
right.
that helped that trade, and we're actually still in it, thinking that if it doesn't go through, there's still a very interesting growth and value story there. And if it does go through, then that will be positive too. So we remain bullish and long, and bullish and long Japanese stocks as part of my Asian team, because if there's somebody who's going to benefit from a China recovery, it's corporate Japan.
Okay. Yeah, you have a feel on the dollar. You know, there's a lot of bears here, Peter. I'm starting to get some signals that we might be setting up. Maybe it's going to be geo stuff, that we're setting up some type of low in the dollar here, whether we, sell off one more time or not, that there could be a pretty good rally. I've even seen counts that could take the dollar back to 106. What narrative would be behind that? Would that have to be risk off happening for the dollar to rally in that type of dramatic fashion?
Likely, but we have to wonder whether the dollar will be that risk off currency again, like it was in 07, 08.
Right.
To
Right.
me, we're at an interesting point here in analyzing the dollar, because we all talk about the exploding U.S. debts and deficits. When will it matter? Will it ever matter? And if it does matter, where will it be reflected? And the knee-jerk reaction is to say, well, it's going to get reflected in the Treasury market. We'll see a backup in yields. We'll see a failed auction, whatever. And I'm beginning to feel that concerns about U.S. debts and deficits is already being reflected in the currency market. And whether that's an outgrowth of what happened with the EU and the US, freezing half of Russia's central bank reserves, and other central banks said, "Hey, we owed too many dollars. Let's diversify. Let's buy gold as one of those assets that we need to diversify in." But more of the world is transacting in key commodities and things non-dollar, and so I do think that worries about us is beginning to be reflected and in the currency market, and maybe it'll happen there before it happens to the Treasury market. So yes, there's some interest rate differential thing here going on. Yes, the Fed's cutting, so dollar is weaker, but other central banks are cutting too. The Swiss National Bank cut to 1% today.
Yeah.
So it's not like we're the only one cutting outside of Japan. Of course, that's looking to hike. So I think the dollar's got some potentially bigger issues here than just analyzing it with our central bank versus others, and rates here versus rates there. That worries about U.S. debts and deficits, I think, is being seen first in the FX market, and then at some point we'll see how it rolls into the potential
Equities.
disruption in treasuries first, and then we'll go from there.
Okay, so we've had a nice pullback in TLT. Your view on bonds? Is this something? Is it in the void, or do we have another pop coming in bonds?
So I've been bullish short-term bonds, bearish long-term bonds. I think the 375-ish level in the 10-year is a huge level, and I've been saying that for months now, because that was the level, give or take, from which we saw the 10-year yield launch last summer to 5% when the BOJ essentially got out of yield curve control. So now that we've come back down here, this level seems to be holding. And if China has any success, you want to be selling the long end, and you want to be buying commodity stocks, which we're long. So I still think that the short end of the curve is much more attractive. I see no attraction in the long end of the curve, and think that yields head back higher again. And this complicates what the Fed's doing. people think they're getting this interest rate relief by the Fed cutting interest rates. Well, maybe yes, if you're a SOFR plus borrower, but in your real estate and you're getting a loan priced off the 10-year, you haven't gotten any relief over the past couple of weeks. Yes, we're down from the highs, but 380 is still a more elevated level than people were hoping for.
Yeah, it looks like it could have 4% in it. I wanted to move. I know that you like energy, and specifically, I believe you've been bullish natural gas. It looks like it finally came out of the hole, Peter. We had a nice little, I don't know, 30% move in natural gas. Still constructive. Do you own
Yes.
shares?
Well, I think, yes, we're long EQT and some other natural gas equities. And I do believe that people are realizing between natural gas and nuclear, they are a crucial part of the energy transition that people want to move with. And and not only that, but obviously the instability of natural gas supplies in Europe has created a massive LNG global market where the U.S. can be a major player in that via its export market. So I remain bullish and long natural gas.
How about uranium? Have you tiptoed into that at all?
Yes, we've been long uranium for years. Sucked wind for a while, I will tell you that.
Yeah.
So I was definitely very early, but yes, we've been riding this uranium rally and continue to do so.
Okay, this is kind of best of breed, isn't it, Cameco?
Yes.
Okay, so I've noticed, and I know you look at everything. We were pretty fortunate with inflation coming down because agricultural commodities have been depressed. They really fell apart after the invasion of Ukraine, and they're acting differently. Could this play into your scenario? I mean,
Well, you said ag?
yeah, ags,
Yeah.
grains.
So yeah, I was long the fertilizer stocks and going into the Russian invasion, obviously not believing they were going to invade, but we were long and sold on that spike. And a few months ago, when I saw the positioning in corn and soybeans in the CFTC data, net speculative short positions rising to record highs, I said, let me take a look at this, and particularly combining with the fertilizer stocks that got cut in half after that 2022 rally, and we started buying them again. Mosaic and Nutrien in particular. We're a little underwater with Mosaic around 30-ish, about 30, and Nutrien around 50. But thinking that these stocks have been really beaten up. They're very cheap. They all pay good dividends. They all generate cash flows at the bottom of the cycle, and we like it. Now, where corn and soybean prices go from here, I do think they go higher, but they're definitely depressed. But that's when you want to buy commodities of any sort, is when they're depressed.
Right. I mean, you could have been saying that for years, but the timing looks good now. So that's how you combine, fundamental analysis with technical. You could have a narrative, but you still need a technical reason to go with it, right? And you looked at commitment of traders was your kind of go signal. Me, it was RSI divergence everywhere. So I knew you'd be able to answer these questions about grains because I know you look at everything. Is there anything we haven't covered on the board here, Peter? That you want to talk about?
I mean, what I think is interesting too with getting to the U.S. stock market is, on one side, positively, the market has broadened out. The obsession with the top 10 stocks got so extreme. And I think, importantly, after going through Q2 earnings season, investors started to sort of differentiate this whole AI tech trade and saying that, okay, we have the AI tech spenders and we have the receivers of that spend. And people starting to question those that are spending $15 to $20 billion a quarter in CapEx. Is that going to be a worthwhile return? Will they derive a worthwhile return on that investment? That, of course, remains to be seen, but people started to question it. So I think the AI tech trade, notwithstanding, Micron jumping today, that's leading to a rebound in it. I think in terms of its dominance and outperformance relative to everything else is over. So I'm encouraged to see the markets expand their imagination and buy other things. But whether the other things can sustain itself, I think a lot will depend on how the Fed threads this needle and whether the slowing deterioration in the labor market picks up steam that can then raise the odds of a recession. We'll have to see how this plays out.
Yeah, it looks like NVIDIA can generate another high, but there's even bifurcation in the Mag 7. Like NVIDIA could squeeze out a new high, but I
Right,
don't
but
think
even
Google,
NVIDIA,
I don't think Google will.
right. I think that there are risks to each one of these stories now in terms of all the spend, and then Google obviously dealing with a lot of competition too, in terms of breaking their grip on their search market share. These are things we have to watch. I think my point is mostly that maybe like I said, the dominance of the AI tech trade and sucking all the oxygen out of the room is sort of played out, and at least we can maybe start buying other things.
Yeah, like Freeport McMoran. The whole
Yes,
cop, the whole
and some value stuff. I mean, there's some cheap stuff out there that there was certainly a wide chasm between growth and value for sure.
okay, and yeah, I think that we've really covered anything. Any questions from the gallery, from attendees here? What do you got? Anything? Okay. 5, 4, 3, 2, 1. Clarify corporate Japan. And so when does the junk hit the fan?
Well, corporate Japan, again, you're talking about companies that will benefit hugely from any growth in Asia, since that's where they are, particularly in China. Uh, Japan is still a manufacturing powerhouse. So, they're going to benefit not only from what they sell to Asia, but Tokyo, for example, in Japan is a great destination for tourism. Uh, I think in 2019, I think it was a quarter of Japan's tourists came from China. In Thailand, I think it was a third. So the rest of the world benefits a lot from the Chinese tourist, from them spending on just things. So that's what I mean by corporate Japan benefiting from any improvement in the Chinese economy.
Okay, well, the world's going to change in November. Well, what do you think is going to be? I'm not going to ask you to predict it unless you want to tell us who you think is going to win, but what's market impact of these presidential elections?
I think if there's a split Congress, I don't think
Yeah.
that it's really going to matter, even though, of course, we'll still have to deal with the regulatory state, depending on who's the president. But I think there are high odds that will be a split Congress. And for markets, it probably won't have that much of an impact. Now, we'll have to see if the Trump tax cuts expire in 2025, they're not extended, we get a rise in the capital gains tax and others, then that could have an impact. But a split Congress could sort of mute any of that impact.
And if it's not, it'll be either Harris or Trump running wild, right?
Exactly. I am worried though about all the tariffs on both sides. I say both sides because Biden certainly didn't take off any of the Trump tariffs, and going into this global protectionist regime is not a good thing. Maybe it sounds good on paper to them. Let's have everyone in the U.S. build everything here, but I think that's more pipe dream than reality, and that's the thing that concerns me.
Yeah, and historically, Peter, wasn't it Smoot Hawley or Harley before the Depression that actually was one of the contributors in the 30s?
You're exactly right. That was a major contributor to the recession becoming a depression.
Okay, and so if we're going to double down on that, that could have major implications for everything.
Exactly.
Surprised it took this long. It hasn't had any impact, really. Have you seen any impact from it besides paying higher prices for things with tariffs?
Well, you look at U.S. manufacturing went into recession in 2018.
That's right.
Driven by these tariffs. And if you look at the manufacturing component of industrial production and you have not exceeded your previous highs.
Okay. All right. Well,
In fact, I'm in front of the chart right now, and I'm looking at manufacturing production within the monthly industrial production data. That peaked in September 2018.
wow.
That was when the tariff battle was really heating up. We have yet to exceed it.
Okay. So it's under the surface of the market, it's already happening.
Right. So,
Yeah.
on one hand, I understand let's protect steel and aluminum, for example. But on the other hand, there are more users of steel and aluminum rather than producers. So you're pricing out the makers of stuff that use steel and aluminum in order to save steel and aluminum, which we can get from many other countries in the world outside of China. We barely import steel from China, but we decided to tariff them anyway. I think 5% of our steel imports come from China.
Okay. Well, everyone, I advise you to go to Peter's Substack, peterbookvar.substack, and follow him on X at pbookvar. And Peter, thank you so much.
Thank you, Dale.
I feel like we know each other after all this time.
Yeah, I always appreciate giving me the chance to be on.
All right. Well, we do appreciate your analysis. Congratulations on the things that are working for you.
All right, thanks so much. Great to talk.
All right, Peter. Yeah, Peter Bookvar, everyone, follow him and learn and have an idea about the fundamentals that are happening behind your charts. So
Thanks.
that's a wrap. All right, thanks, Peter. That's a wrap. You could join the team in 19 minutes on the Morning Edge, and don't just count your, I don't know, whatever you're counting. Don't just count those. Count your blessings, and that's a wrap. Take it easy. I'll see everyone. Adios. You're welcome.